Hello again, and welcome to another episode of the Uranium Market Minute. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you so much for tuning in. Really been enjoying these episodes. Really appreciate all of the great comments on YouTube and all of the feedback on Twitter. If you're enjoying this content, please like this video, subscribe to our channel, and hit the notification bell. So anytime we publish a new episode, you'll be notified, which is just about every day. Again, nothing in this video is intended to be investing advice. I am not your financial advisor, and this is not financial advice. Always do your own due diligence with investing and take responsibility for your own actions. With that, let's jump right into the daily scoreboard here. The price of uranium today on the spot price is $48 a pound mid-market, down slightly yesterday from $48.75 a pound. The spot price continues to just slowly trickle down, seemingly on low volume. The Sprott Physical Uranium Trust, also known as SPUT, took in only $600,000 yesterday, while issuing 48,500 new trust units. They did not purchase any uranium yesterday. They closed the day at a slight premium to NAV, 0.7% to NAV. A reminder that they essentially need to trade above a 1% to NAV in order to purchase uranium and issue shares, as they take a 1% fee for all the uranium purchases. Today, the SPUT is selling off quite a bit. We'll go over the charts in a second. Uranium is taking down as well, but I believe that they're trading at a close to a 5% discount to NAV. We're going to see a lot higher trading volume here as investors understand that SPUT's intention is to keep that vehicle close to NAV. So anytime you have a discount to NAV, you're going to see some higher trading volume, some more investors taking advantage of that dip. Since August 17th, when they issued their ATM, they've raised $433.2 million of new capital and have acquired 10.3 million pounds of uranium. They currently are sitting on 7.8 million in cash. Looking at the ETFs here, URA reported 150,000 shares of new issuance yesterday, which equates to 2.5 million in mandated buying of their underlying holdings. They're only 70% weighted to uranium equities, remember. URNM, however, reported 100,000 shares of redemptions, which results in 8.2 million in mandated selling. The net effect of these two ETFs will be 5.7 million in selling, which we're probably seeing in the sector today as things are generally red. Overall, month to date, the two ETFs have brought in just over 400 million in new money, which is absolutely incredible. Let's go ahead and check out the charts today. Starting with URA here, a pretty big bearish candle here. Looks like this somewhat of a head and shoulders pattern that is playing out on the daily is following through. Volume increasing. This doesn't look bullish short term. However, overall long term, this is still a very bullish chart. We still have all of our moving averages moving up. However, RSI ticking back down after trying to recover for a few days. MACD continuing to slide down. I would say we have a little bit more selling to go with this, and this is likely to lead to some more outflows, which means we'll have a bit more selling pressure in the sector going forward. In my opinion, since we've broken down below this initial resistance that was support for a short time there, so we've broken down below that, and we have broken down almost to the next point of resistance, which should be some support. I would expect if we don't bounce here, that maybe we come down to the rising 50-day. If we do, in my opinion, that would be a absolute buy the dip scenario. Let's check out URNM. Very similar looking chart, although holding up better than URA. Slipped down below that 20-day that seemed to be initial support for a number of stocks in the space. Not quite to what could be some support at previous resistance here in this $70 to $71 range, 72, 71.50. And again, all the moving averages continue to rise. Long-term bullish, short-term bearish. Should see some more outflows from another day like this. The volume is not as high relative to URA today on URNM, so that's a good sign. Let's go to SPUT. Like I said, much more volume into this stock today compared to the last 3 days. And that's likely because they dipped down to a decent discount to NAV, somewhere around 5% below NAV today. So in my opinion, traders that know that SPUT is going to keep that vehicle close to NAV are taking advantage of that dip. Increasing volume, which is a good sign here, and we're seeing a little bit of dip buying happening, just as I mentioned. Let's take a look at a couple of the large caps. Cameco also down on decreasing volume. Looks like we're headed to the 50-day on that one. And let's take a look at NextGen, a couple of the large caps here. NextGen bounced perfectly off of that 50-day. In my opinion, that's probably a good buying opportunity, though we could see a bit more outflow from the ETFs. The previous pullback before this latest run, it bounced perfectly off the 200-day, just like clockwork. So we should see the 50-day act as support. If we lose that for whatever reason, anything below that and above the 200-day, in my opinion, is the load the boat kind of area. So overall, in my opinion, what we're seeing in the sector is a bit more weakness that's coming from the URA redemptions and URNM redemptions. It's nice to see that there's some good volume coming into SPUT. And what we have right around the corner is some seasonality for uranium. And the fiscal year for the US utilities begins on October 1st. And we're likely to see some increased volume come into the spot market, not only by SPUT, but potentially other funds and potentially the utilities as well. We already know that utilities are picking up in their activity, both in the term market and in the spot market. So we should see that translate to the spot price. And speaking of spot price forecasts, I'm going to share my screen one more time here. This is a report recently issued by Canaccord. And I'm going to post a link in the show notes just down below here to John Quakes on Twitter. He posted this Canaccord Genuity chain reaction mixing fundamentals and financials. So they're discussing the advent of SPUT coming into the space. And look at this price forecast. Peak pricing on deck, upgrading our long-term forecast. In this report, we consider the potential for near-term uranium price peak to $80 a pound, driven by a wave of physical purchase. They're expecting this by year end. Yeah, and while history has shown us there's a precedent for the price to potentially surge north of $100 a pound, this is a very, very bullish report. Now, am I on the same page? Do I expect we will hit $80 by the end of the year? I'm not betting on that, but it's absolutely in the cards. So I want to go ahead and discuss a question from the mailbag here. And if you have questions, you can send them to us just on Twitter or tag us on Twitter at Uranium Insider. You can ask the questions in the comments below. That would be helpful. And if you're interested in receiving a sample newsletter from us, support@uraniuminsider.com. So here's the question for the day. Justin, I don't understand this concept of seasonality and why it affects the uranium market. Can you explain? Great question. So basically, what happens in the autumn and into the early winter is all of the players in the nuclear fuel market come back from the summertime. And you typically have a rise in the uranium spot price. Now, it's not guaranteed. It doesn't happen every year, but it happens most years to the point that you'll see a pretty consistent, if you look at an average seasonality chart for a number of the uranium stocks, you'll see that on average, they move really strongly from about October through December, January. Sometimes it even goes further than that. I'm going to go ahead and share my screen again of the seasonality chart for Uranium Participation Corporation. So this is, you can see, so why am I showing the seasonality for UPC? Well, UPC typically tracks the price of uranium. Obviously, UPC prior to SPUT would trade at much greater discounts and premiums to NAV. But it's an overall basic kind of way that we can take a look at how the price of uranium moves on a seasonal. So we can see that, February, March, there's a general downtrend all the way into the autumn, which means that the bulk of the buying of the commodity, and I believe this is on a 15-year range ending in 2020. So 2005, 2020, this is the average chart for UPC. In October, right after that new fiscal year, the buying starts. And most of the time in normal markets, the buying is being done by uranium traders, carry traders, and utilities primarily, with utilities doing the bulk of the buying and doing all of the end user buying. Now that we have SPUT in the mix and other hedge funds buying physical uranium, as well as non-producing companies buying uranium, we should see an even stronger move in seasonality. This is what we're expecting. This is what we're betting on. And there's a number of other factors as well. So every autumn, there's quite a few different nuclear fuel conferences globally. They are happening now. They are happening in the next couple of months. And it's basically when all the players in the space kind of come back to the table. They make their discussions, they make their deals, they make their decisions with their new budgets based on what's happening in the market and the outlook for the market and their actual needs, short-term and long-term, for uranium. In our opinion, we should see greatly increased activity following this year's nuclear fuel markets, nuclear fuel conferences, based on what we're seeing in the spot market and how the financial players are shaking things up. We know that the primary nuclear fuel consultant is finally sort of discussing this in a more serious manner and basically saying, don't expect to see substantially lower uranium prices anytime soon. And nobody knows how high or how much the price of uranium is going to rise in the short, medium, or long term based on these factors. So they're finally starting to kind of blow the whistle on this and raise the flag and let their clients, which are the utilities, know that this is here, it's happening, and expect higher prices. So that's what we're expecting. And honestly, when I see pullbacks like this, especially when it comes after a pretty parabolic move in the uranium stock price, and the uranium stocks pricing, as well as the price of uranium, not only is it a healthy correction, but when volume comes in, you know that you have the ability to buy without paying premiums in the ask. So the bid-ask spreads are usually very low on days with high volume selling. So as a contrarian at heart, with a very bullish short and midterm outlook for this sector, let's say even the short term, super bullish into the end of this fourth quarter of this year, into the Q1, with the seasonality trade, very bullish. And of course, overall bullish in the midterm, let's say 18 to 24 months. Things are looking extremely positive. So when we have these sell-offs, if you thought you missed it, you didn't. Here you go. The market's giving you a little gift. We've been buying this week, bought pretty heavily on Monday when we had that big sell-off. Could have got a better deal waiting a couple of days, but I don't really care. I never go all in. I like to nibble. I like to almost dollar cost average, but do so on red days. It's what I've done for years, and it continues to work. Uranium Insider Pro members had access to our weekly watch list, which we update every week prior to the Monday open. And I did a video update pointing out a lot of levels to look for on the stocks that we follow and the stocks that we recommend. And not to pat myself on the back here, but a number of the stocks pulled back almost perfectly to those previous resistance points that became support, and we're buying opportunities for our members. So if you're interested in checking out our newsletter, again, email us support@uraniuminsider.com. We'll send you a sample from previous month's letter, and we look forward to seeing you again soon. Cheers.